So this was, and this volume was, this volume was already here, right? So thesis was, okay, where is volume aggregating from this point, which was December 24 pivot, i.e. just the reversal point. So you've got the volume profile. This is I call it a volume shelf because it's, it looks like a shelf and it's just where the largest aggregation of volume is. A lot of the time in this case, if you're chopping around down here, you know that it's accumulation. Someone's accumulating. So the ideal setup here is when you're starting to get these like positive candles here, it's decent, but you still have a little of this supply you need to get over, right? So you essentially wait for this type of candle where you've got the close, and then in this case you did have technically a close above this long volume bar here. It's called the point of control. So it's where, because each one of these little rows represents volume at a specific price range, right? So if you look here, we knew, just based on where this volume bar is, from here to the top, pretty much from 78 cents to around 90, that's where the biggest volume node was. That's where that price range had the most volume aggregating. So then, so these volume shelves can almost act like a base for price, right? Like if you have a rocket ship,
we got some support.
Yeah, because a rocket ship needs a hard base to move up off of because the energy's coming down, it's pushing it up, right? So you can essentially look at price as the rocket ship. The volume shelf is essentially that base that it's creating to move off. And then, okay, that's a high probability setup in itself. That's like playing blackjack and you've got a 20 dealer showing like a 12, that's decent probability of you winning that. Not guaranteed. He could, literally pull out hit a 21, but pretty high probability. Then you pair it with this, right? So price is chopping around, but the MACD keeps getting closer and closer. So this is like the second part of this.
Where was your setup? From up there, the pivot, Civic?
Yeah. You're on the daily there, right? I'm on the weekly. The weekly is just a little less noisy. So I'm over here loading the freaking boat. Like, just
know that the volume shelf is about to be the springboard by which price accelerates.
Yeah. So I'm like, and I bought shares because these stocks can move very quickly because they're smaller cap stocks. So it can move a lot quicker than a Google or something that takes a lot of money to move it.
Got it.
And
does this same strategy work on large cap and
small cap? Oh yeah. Oh, it works for anything that has a setup. It could be a company that sells bags of dog poop. It doesn't matter. I'm serious. It doesn't matter what the company does. So you've got, this is called the upper part of the chart, right? Upper indicators include simple moving average, any moving averages, anything that interacts with price is an upper indicator. Or anything below that it's essentially an oscillator for the most part. These are called lower indicators. Same thing though, right? You're seeing price flat, histograms moving up, i.e. MACD is getting closer to the signal line. Williams percent range is printing divergence, meaning, it's got these higher lows shown by the upward sloping line. RSI got oversold, also has upward sloping area. So, it was if I had to grade this, it would be like an A++ setup.
So that's, because you're going to get both.
Yeah, because you've got the upper part, and then you've got the lower signal as well.
And
so you confluence. Yeah, you have a confluence of two different ways of, kind of like what I just said with Jeremy, right? If he gets the same signal if he gets the signal that a stock is going to go up, and I'm using slightly or totally different things than he is, and we both get the same signal, that makes a market, right? That creates this influx of demand because different perspectives are all seeing the same buy signal.
How do you determine your anchor though? Because So you're going with it.
It's almost always the most recent pivot. I wouldn't anchor it here. I wouldn't anchor it
Right.
here.
Most recent pivot would be the turn of we had some
Yeah.
some resistance up there.
Well, this is just the turn of the trend, yeah. Because I don't want to anchor it. I don't.
Yeah, that means there's no price action you're gonna hit. So yeah, you want to get the price action on top of it.
Yeah. So this is why my initial target was this volume node. So like 150, 160. And then from there, the things just keeps going. This is where you pull out the monthly candle chart. And if you go in ONDS, this is a much better view of what you were trying to look at yesterday. So this is when you anchor the VWAP here. And you can see literally you get this mean reversion move almost every, it's happened 3 times now. Mean reversion move would be 232. So that's why the target is essentially 232. At that point, it's a high probability of it probably stalling at least a little bit. So that's essentially like walking through a trade. And going through different, because on the daily, you were kind of seeing the same thing, like MACD going up. Now, one thing that's interesting is the MACD also has what's called a zero line. So this is the zero line. So when the MACD broke down through the zero line here, that's when the trend accelerated to the downside. Well, notice here, even on this pop here,
It still didn't break the zero line.
never broke the zero line. Now, it finally did break the zero line. So that's a huge status quo change, and that's why you're seeing this kind of move. So, and that could also be a signal, right? Maybe someone who uses the MACD zero line now becomes a buyer because their signal went off. And it's like, okay, you kind of get these like it's like passing on the baton. Okay, my signal went off. I hit my profit target. I'm selling. Next guy or girl
As their version of their signal to buy, so they take it off you.
that creates the next leg of demand.
Wow.
Yeah. And so here, like, my price target on the daily chart is this previous pivot zone here.
Right.
Well, then if you cross-reference that, okay, so this is somebody whose resistance level is very basic horizontal. Horizontal resistance is essentially just saying, okay, this was previous resistance, and you kind of take this zone, because it's never going to be an exact price.
Like, going to be within a margin of error.
Yeah.
Or down.
Yeah, so that's why I have 215 to 225. Well, if I go to the monthly candle now, this VWAP is at 232, so it's literally almost the same exact price. So then this area will probably become a resistance zone because you have multiple market participants that are seeing this area of resistance from multiple facets, right? VWAP traders are seeing the VWAP from this point. Horizontal price action traders are seeing 215 to 225 as their sell point.
Interesting.
So it kind of creates this, same exact thing what happened at the bottom. Everyone's getting a sell signal at the same time.
So then on that Pepsi trade that you're looking at now,
Yeah, so we'll go through the Pepsi trade now, right? It's almost the same exact trade.
yeah.
I mean, literally. So you've got,
So you're working under the premise that it uses this volume shelf as the springboard to go upwards.
Yep.
This is anything in here up to that first blue line is your first take profit, and then you'd roll it into the second one, which is up to this second volume shelf.
if and when there's a daily close above this, remember, because that was a false signal.
Oh yes.
So, if
You're really looking for the light blue line because that's your big signal that it's fully moving.
yeah,
Got it.
because price hasn't really broken above that, that particular standard. I wouldn't say it's not a standard deviation. It's just a percent band. Yeah, I mean, this is literally just saying, okay, let me take the VWAP and increase it by 1.5%. That's why it's completely parallel. So like this is the trade, right? So we're gonna take from volume shelf to here, go to the weekly candle, I also sometimes look at like patterns as well.
This thing's got rid of the 142.
Yeah. Yeah, exactly. So same thing, MACD's curling to the upside. I mean, ideally, you'd want to see a close above last week's high of 132.72.
Okay.
That would be a better signal. But we already have the MACD curling. You've got divergence here. You've got divergence on the RSI.
Seeing enough.
Mm-hmm. On here, on the monthly candle chart, you've got a hammer candle forming. This is that was in May. So hammer candle is a signal of the seller exhaustion. Then you anchor a VWAP. And this is where it becomes, I don't want to say subjective, but
Your pivot is 15 years ago?
yeah. Well, this is the monthly chart. So if you go back and look, okay, this is how I do it. I say, okay, what's the most recent low since this point? COVID. Okay. Well, price is way down here. It tells me nothing. What's the next low? Here. Here.
Still useless.
Makes no sense. And you say, okay, well, this is the next one. Still useless.
Wow.
And you go to here.
And now a close. But we had a previous.
You had this crazy wick here that you would have gotten stopped out a couple times. I mean, it's decent. I mean, it's like you got this.
Wait for him to be allowed at the bottom.
Why? What?
Keep anchoring down there at the bottom.
Oh, I was just telling him.
Literally, you just took that.
So you want to know where's potential support as a function of the VWAP, right? Okay. So what's the most really important low here?
Probably the big one right there.
It's irrelevant. Price is way below it. So then you go, what's the next low? Here. Irrelevant. Next one.
Sure.
Irrelevant. It's false signal multiple times. And then you could take it technically here. I wouldn't do it here because this low is higher than this low. So then you kind of continue to move down, but this wick is really throwing me off. So I really want essentially to move this pivot point to where it captures this wick within a couple percent. I mean, this was when the Chinese market imploded.
Are you on the monthly?
Monthly, yeah. So now, price is not there yet, right? Well, it was also not there yet here. It was also not there yet here. So this is when you throw a percent band to capture that upper band. And you say, okay, let's give it like a 5% margin of error. Now, all of a sudden, you've got a perfect low here. Not a perfect low, but this was definitely like like August 2015 that's when the market tanked because China's market just imploded. Right here. And now you just tested it again here. You also, on top of that, now have a hammer candle on for May, right off that zone. So you've got a confluence of daily setup, volume shelf setup, mean reversion move, weekly candle setup. You've got multiple bottoming candles, MACD curling up, divergence on RSI percent range. Then on the monthly, you've got a long-term support zone tested. So like you're using multi-time frame analysis to really get a confluence of signals. That's kind of the way I look at the market. But yeah, it's, I have a video on it too. I can send you all the videos that go into it.
You got a lot that goes in.
I got what?
You have a lot that goes in. I'm gonna like, all right. Look at YouTube setup. Got a 10 EMA for me.
Well, that's what I was telling him. Well, that's what I was telling him is,
Yeah.
well, that's what's going to move the market is I don't look at that, but I still have a buy signal. Now you're getting a buy signal with a moving average strategy. So now everybody's getting a buy signal at once is what's going to make it move.
I mean, the weekly doesn't have any.
The weekly goes
up. It's got consolidation.
Yeah, but you've got some pretty big capitulation like candle, like volume.
That big volume right there took out everything.
Yeah.
So probably those two team Finney Mays, consolidation across the board there. Hate volume here. Yeah, I like a volume shop. That's pretty cool.
Because it gives you confidence in where volume is, right? You can technically do that. Essentially what you're doing is you're taking this volume and you're just aligning it that way.
Yeah.
And
But like the entering part of that recent pivot right up here. And then that is we all see where zones are go.
Yep. Yep. So I mean Amazon's another one. So if you look at Amazon right here, same volume shelf setup. So like if there's a volume shelf setup, I get pretty excited. Like, cause you know that there's a higher probability in not. So what you do is same thing, right? Price is consolidated. It's starting to get above that point of control. This creates kind of the launch pad, if you will, for the next leg up. Front daily. Oh yeah, daily is probably better. So yeah, look, daily.
Go with Tesla. Yeah, you'd see this goes.
So like this is my subscriber Tesla chart. It's extremely simple. It's like, I've had these levels for the last like week. So what I will say is there's really no edge right now at all. Unless you're a range bound trader. I mean, technically this.
You got Tesla come down. So the 100, 200 sitting at 310. That's kind of the number I see it going down, bro. You got.
I'm just using this pivot. So previous support is flipped to resistance here. It's back to support. So if you're a range bound trader, this is probably a decent risk to reward because your invalidation would be the bottom of this zone at 325.10. So you're risking about 7 to make what, like 25 up to 362 to 367.35. So like, yeah, this would totally be a decent range bound trade. But like I came out on Sunday. It's like, hey, Tesla's a downside, target was this. And so now it's probably a decent area to bounce.